Dividend investing is one of the easiest ways to create passive income, but for many, living off dividends can seem like a distant goal that requires decades of investing, which leaves many investors wondering, how can I speed up the process? How can I fast track my journey to retirement and get there ASAP? Well, that's what this video is all about. We'll be discussing how to live off dividends sooner than later and why the quickest way might not actually be the best way. But before we get to that, in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Now, when talking about how to live off dividends, one of the most crucial questions to answer is, how much do you need? Obviously, this is going to be different for everybody, but technically you should be able to start living off of your dividend income as soon as that income can cover all of your monthly expenses. If you think about it, you actively work to pay your bills, but if you reach a point where your dividend income is able to cover all of that, then at that point you really don't need to work anymore, and then work becomes optional. However, another factor to consider is, what kind of lifestyle do you want to have when you stop working? Are you okay with just being able to cover your bills, or are you hoping to be able to do that and travel more and generally enjoy a more comfortable lifestyle? By getting all of this dialed in, you can set a realistic goal for your desired dividend income, and then once you have that magic number in mind, then you can ask, okay, how can I get there ASAP? From here, what is the fastest way to live off my dividend income? And the strategy is real simple, guys. Maximizing your dividend income quickly can be achieved by investing in stocks or ETFs with higher yields. This approach provides a higher return per dollar invested, enabling you to generate more income sooner. However, like I said earlier, the fastest way is not likely the best way, which I'll explain in more detail momentarily. But first, let's take a look at an example to see how this might work. So in this example, we're going to take a look at JEPI, the JP Morgan Equity Premium Income ETF, which is a covered call ETF, and it has an extremely high 11.76% dividend yield. Now, what this means is that for every $10,000 you have invested in this ETF, they'll pay you $1,176 per year in dividends without you having to lift a finger. Now, if you just invested in JEPI, which is a strategy that I do not recommend, but if you did, how long would it take you to reach a point where you could live off the dividends? And to do this, we're going to be using the marketbeat.com dividend calculator, which is a very handy tool to use. I highly recommend you guys check it out. But this will allow us to see, based on some different inputs here, what an investment in JEPI today might look like a number of years down the road. And like I said, in this example, guys, we are just investing in JEPI, and we're going to start things from scratch. So in this sample portfolio, we're starting with 2 shares of JEPI, basically $110 invested. And I've already input JEPI's dividend yield 11.76% here, and we're not accounting for much dividend growth or share price growth. We're going to use 2% for both of those. JEPI pays a dividend every single month, so we'll account for a monthly distribution. And in this example, guys, we're going to start by looking at what a portfolio might look like if you invested $100 every single week, which amounts to $5,200 per year. And one more thing, guys, our magic number in this example, basically the amount of dividend income we'd need to be generating to be able to retire, we're going to use $60,000. And I know for some of you guys out there, this number might be a little bit low. For some of you guys out there, you could probably retire off less, but I think $60,000 is a nice solid number. So we're going to use that as our retirement number in this example. So anyway, scrolling down, taking a look at the results, guys, we can see that just in the first 5 years, there's not too much action going on, just under $3,000 of dividend income from JEPI. But then going down another 5 years, taking a look at year 10, this really picks up, and now we're almost at $10,000 of dividend income, 1/6 of the way there. And scrolling down a bit more, guys, going down to year 15, we've basically doubled the dividend income, and now we're bringing in over $20,000 per year. And then going another 5 years, guys, year 20, we're making over $40,000, so we've doubled it again just in the last 5 years. And scrolling down a little bit more, guys, if we take a look a few more years down the road, by year 23, we are bringing in over $60,000 of annual dividend income. So there you go, guys. By investing $100 into JEPI every single week, probably within 23, less than 25 years for sure, you'd be able to retire and live off of your dividend income. One thing you can do to speed up this process even more and shave some years off this timeline is just increase the input. So going back up here, if you're like, $100 per week is just not going to cut it, you can actually just double that and invest $200 per week, which would be $10,400 per year. Let's see what this looks like. So by doing this, guys, by doubling the amount that you're investing every single week, you'll hit $60,000 of annual dividend income by year 18. Actually, it'll take less than 18 years. And although investing in higher yielding stocks and ETFs like we saw here with JEPI is going to be the fastest way to retire and live off your dividend income, like I said earlier, it's not going to be the best approach, because typically high yield dividend stocks come with a considerably higher level of risk and volatility, which also comes with more stress. However, this isn't always the case, and there are some pretty solid higher yielding stocks and ETFs out there. I mean, I personally have JEPI in my own portfolio, but I would never be so bold as to put all of my eggs in that one basket, because typically with these high yield dividend stocks, guys, the yield may not be sustainable, which makes sense if you think about it. You know, you as the investor are paid more in exchange for taking on that higher level of risk. And having said that, it begs the question, so if the fastest way to live off of dividends isn't the best way, then what is? I think the best way to invest is a more balanced approach that places a greater emphasis on owning more solid, stable companies that are likely to be around for a long period of time. And while the dividend yields from these sort of companies aren't going to be as high, they typically come with a lot less risk, and they do tend to offer a lot more in terms of dividend growth. Like for example, if we look at a company like Texas Instruments here, it has a 16.37% 5-year growth rate. That means that on average, every single year for the last 5 years, Texas Instruments has increased their dividend payments by over 16%. Another example is Home Depot, which I know many of you guys have heard of. Home Depot is a household name here in the United States. They have a pretty similar 5-year growth rate, 16.38%, so that's pretty substantial. And this third company here, Broadcom, has a crazy high 5-year growth rate, one of the highest I've ever seen, guys. Theirs is sitting at near 30%, and the only way these companies are able to support such consistent and aggressive dividend growth is because the underlying financials of the businesses are very strong, and those are the types of companies you want to invest in. Fortunately, you can conveniently get exposure to over 100 of these types of companies by just investing in an ETF like SCHD, the Schwab US Dividend Equity ETF, whose top 10 holdings include the 3 stocks we mentioned a moment ago, as well as some other recognizable names like Coca-Cola and IBM. Now, as far as their dividend stats go, we can see that the dividend yield is nowhere near as high as JEPI's, which is fine, but that dividend growth rate is off the charts, and they've been growing that dividend consistently ever since they came onto the market back in 2011. Now, if you just invested in SCHD, which in contrast to JEPI, I think is actually something you could get away with. Like you could have a whole portfolio that's just SCHD. And if you did, let's see how long it would take you to get to a point where you could live off those dividends. Okay, now back over here on the marketbeat.com dividend calculator, we're going to be going through a very similar example, just like we did with JEPI. For SCHD, we're also going to start with 2 shares. So there's about a $150 investment. We've got SCHD's 3.34% dividend yield plugged in here. And because this is a higher growth ETF, we're going to account for an 8% growth rate on average for the dividend, and also 8% growth in terms of share price. And then just like with JEPI, we're going to see what happens when we invest $100 every single week into SCHD. Okay, now scrolling down, in contrast to JEPI, which took about 23 years to reach $60,000 of dividend income, with SCHD, guys, you'll hit this point between 36 and 37 years. So that's about 14 years longer to reach $60,000 of annual dividend income than it took with JEPI, which might have you feeling a certain kind of way. And if you doubled up your weekly investment and threw in $200 per week, it's going to take you 30 years to hit this $60,000 mark, which is still like considerably longer than it took with JEPI at just $100 a week. The moral of the story, guys, is that dividend investing really is a long-term game, and it's most definitely not a get-rich-quick way to invest. Just like anything else, if you want to do it right and you want to build something worthwhile, there are no shortcuts. And I know it may seem like it's going to take forever to see real results, but I promise you guys, you will reach a point, and it will happen sooner than you think, where that dividend snowball really starts to take off. And that's what I'm telling you about in this next video right over here. I'm going to share with you where this point is, when it happened for me, and what it's going to take for you to reach this point in your own investing journey. So click right here to learn all about it, and I'll see you in the next one.